Joining us now ahead of today's inflation data, Sylvia Jablonski.
There really was no inflation, by the way. Interest rates should be a lot lower than they are.
They fell again, but we're below all of our levels again. Remember the ones we're looking at? We're below all of them again. CEO and Chief Investment Officer of Defiance ETFs. Sylvia, I mean, interest rates are pretty low anyway on an absolute basis, or a historic basis, at least. Are they not?
Good morning, Joe. They are pretty low on a historic basis, and inflation has certainly come down. But, to the point that I just heard Andrew make, I mean, if you don't have inflation, perhaps it could be time to cut, or at least, it gives Jerome Powell a lot of legroom to act here with the markets.
Right. I agree. And it's bad to let inflation come back if you've got it almost handled. That would be very bad. But if it were handled, why not put the pedal to the metal and, ease up on some credit concerns we have for consumers, mortgages, loans, whatever you want to talk about. It's always nice to have lower rates. I think, a real estate guy like President Trump certainly thinks about that. So you watched yesterday for all the tariff drama yesterday. They're not big moves at all either way in the markets, and I think the S&P's up 6% for May, even with the tariff backdrop still being, in effect at this point.
Yeah, and I think we're just going to live with this. I think it's going to be a level of uncertainty going forward until we get answers here. So we saw what happened in the courts, and now we hear, President Trump coming out and Peter Navarro coming out. There is no plan B. This is plan A. Section 122, we're going to find a way around it, whether it's, 15% instead of 10, although that's lower than 50, but that's, the negotiations would have got us hopefully lower to 10 anyway. So it seems like something will happen with tariffs. We don't know what, but, the caveat here is what sends the market the other way. What would send the market the other way is this potential, stalled talks with China. Like, what does that mean, right? I think that's where everybody is really looking for color. I think that most of us expect that there will be some sort of normalcy, reversion to the mean, perhaps equalization of tariffs with Europe and other countries. It's really China that's the wild card there.
Yep. For all of that movement yesterday, it was weird watching the markets. When the tariffs were off and it looked like traders were excited, up 400 points, it traded below. The Dow at one point was down before the court came in and put a hold on what was construed as bullish earlier. And then the market, even though the tariffs are back on, that happened during the session, and the market still closed up yesterday. That was surprising, wasn't it?
Well, I think the other thing that happened, though, was Nvidia, right? And I think every year you have this market darling. I mean, it's been Nvidia for a couple of years now, but prior to that, it was, Tesla. Prior to that, I think it was Apple. I think when you have a stock like this that, everyone on the planet is investing in, and they come out with these stellar earnings, 69% year-over-year revenue growth and this bright outlook, and, Jensen Huang and all the positive talk about demand and, something that can really move the markets forward in the future with AI and technology and quantum and all this type of thing, and tech and communications rally. I think overall that's good for the market because those are the sectors that everyone watches. We all love breadth and things like this, but at the end of the day, everyone watches Nvidia and the mega caps.
People have said that we may have hit new lows depending on what happens with tariffs. Do you see any scenario that maybe something with China, I don't know, that could happen, something really negative that could send us down another 1,000 points or something in a day on the trade front? Or it almost seems like, we've been hit with a lot of different, what would be seen as negative tariff news, and the market's up it's almost back to 6,000 on the S&P. So is it possible to retest the lows based on trade disappointment for traders?
I think we've seen the worst in trade talk disappointment, and we've seen this, we've talked about this before together, actually, this art of the deal, right? Like going hot and kind of, let's dial back. The market's crashing for whatever reason, whether it's bond market or equity market. So I think a lot of it is priced in. The uncertainty is now par for the course within the market. That being said, I think if we ever get to a situation where we're talking about 100% plus tariffs, with the U.S. and China, that is problematic, and that would actually pull the market back. But at this point, I don't see us going there because I think we already started there. So it would be a strange, kind of head fake to go back and pull it back again. So I think we've seen the worst of it. But do I think the market can correct? I do. I think the summer's coming, even for the sake of June being a soft month, we might get a small pullback here, but probably not going to retest those lows.